Preparing for a financial analyst at Airbus interview? You've reached Candy Mentor, and this video is for you. We'll walk through 25 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a financial analyst do at Airbus? Airbus is a global aerospace and defense manufacturer with commercial aircraft, helicopters, defense, and space activities. A financial analyst supports decisions by translating operational data into reliable forecasts, variance analysis, and recommendations. I would connect revenue, costs, cash flow, and risks to drivers such as deliveries, backlog, production rates, supplier performance, and program profitability. Strong communication matters because analysis must influence cross-functional decisions and accountability. While answering, focus on translating operational data into forecasts, explaining variances, supporting decisions, partnering with finance and operations, and connecting financial outcomes to aircraft deliveries, production rates, backlog, and cash generation. Question 2. Why do you want to work as a financial analyst at Airbus? I want Airbus because it combines sophisticated finance with a tangible, long-cycle industrial business. Aircraft programs require disciplined forecasting, contract awareness, cost control, and close partnership with engineering, procurement, and operations. I am particularly attracted to the connection between financial analysis and real operating decisions, such as production ramps or supplier constraints. My strengths in Excel, financial modeling, attention to detail, and clear communication would let me contribute while developing deeper aerospace expertise. Make sure to cover Airbus's global scale, long-term industrial programs, analytical complexity, interest in aerospace, learning opportunities, and how your skills can improve forecasting, reporting, and business performance. Question 3. How would you analyze Airbus's revenue performance? I would begin by separating revenue into commercial aircraft, helicopters, defense, and space, then identify the main changes versus budget and prior year. For commercial aircraft, deliveries, customer mix, pricing, and contract adjustments would be central. I would also assess services revenue, defense milestones, foreign exchange, and backlog conversion. Finally, I would reconcile the operational bridge to reported revenue and explain whether the movement reflects volume, price, mix, timing, or accounting effects. In your answer, talk about decomposing revenue by segment, aircraft deliveries, pricing, mix, services, defense contracts, currency, backlog conversion, period comparisons, and reconciling operational indicators with reported results. Question 4. What financial metrics would you monitor for Airbus? I would monitor revenue, EBIT, EBIT margin, free cash flow, order intake, backlog, aircraft deliveries, and net cash. I would supplement those headline metrics with working capital movements, inventory, advances from customers, research and development spending, capital expenditure, and program profitability. The key is understanding relationships. Strong orders support future revenue, but cash may depend on delivery timing and customer advances. I would compare each metric with guidance, budget, and operational drivers. Be sure to mention revenue growth, EBIT, EBIT margin, free cash flow, order intake, backlog, deliveries, working capital, net cash, research and development, and program-level profitability. Question 5. How would you build a monthly forecast for Airbus? I would start with the latest actuals and build a driver-based forecast rather than simply applying a growth rate. Key assumptions would include deliveries, production volumes, aircraft mix, pricing, supplier costs, labor, foreign exchange, customer advances, capital expenditure, and program milestones. I would create base, upside, and downside cases, reconcile the forecast to management guidance, and document changes from the previous version. Review checkpoints would test both formulas and business assumptions. Focus on establishing historical baselines, operational assumptions, delivery schedules, production rates, pricing, costs, currency, working capital, scenario analysis, review controls, and clearly documenting assumptions. Question 6. How would you explain a major variance between actual and budget? I would first confirm that the variance is real by checking source data, period cutoffs, and mapping. Then I would bridge the difference into volume, price, mix, timing, foreign exchange, productivity, and one-off effects. For example, lower deliveries could reduce revenue while increasing inventory and overhead absorption. I would distinguish controllable issues from external events, discuss the forecast impact with stakeholders, and finish with specific actions, owners, and deadlines. Mention validating data first, quantifying price volume mix and timing effects, separating controllable from external causes, identifying root drivers, discussing business impact, and recommending corrective actions. Question 7. What is free cash flow, and why is it important for Airbus? Free cash flow generally represents cash generated from operations less capital expenditure. At Airbus, it is especially important because accounting earnings and cash timing can differ materially across long production cycles. Customer advances, inventory build, supplier payments, aircraft deliveries, research and development, and industrial investment can all move cash. I would analyze the bridge from EBIT to operating cash flow, isolate working capital effects, and assess whether cash generation is sustainable. Cover operating cash flow less capital expenditure, working capital, customer advances, delivery timing, research and development, industrial investment, liquidity, and why cash conversion matters alongside accounting profit. Question 8. How do customer advances affect Airbus's financial analysis? Customer advances provide cash before an aircraft or service is delivered, so they can materially improve operating cash flow and working capital. Accounting-wise, they are generally recorded as contract liabilities until performance obligations are satisfied. I would track advances by program, delivery schedule, customer concentration, and potential cancellation or refund exposure. A strong cash result driven only by rising advances may not be repeatable, so I would separate timing benefits from underlying cash conversion. In your answer, explain that customer advances create cash before delivery, appear as contract liabilities, support working capital, reverse into revenue or reduce receivables, and require timing and cancellation analysis. Question 9. How would you analyze Airbus's backlog? I would view backlog as an important indicator of future activity, but not automatically as guaranteed revenue. I would analyze order intake, cancellations, net backlog, aircraft mix, delivery dates, pricing, customer credit quality, and available production capacity. I would also assess whether supplier constraints or program delays could postpone conversion. Comparing backlog with annual deliveries provides an approximate coverage ratio, while cash analysis should consider deposits, milestones, and potential contract changes. Make sure to cover order intake, cancellations, backlog valuation, delivery timing, production capacity, customer credit, pricing, conversion into revenue and cash, and risks from delays or renegotiations. Question 10. What is the difference between EBIT and EBITDA, and which would you use? EBIT is operating profit after depreciation and amortization, while EBITDA adds those non-cash charges back. I would use EBIT when assessing Airbus's operating profitability because aircraft programs require substantial industrial assets and depreciation reflects their economic use. EBITDA can help compare operating performance before capital intensity or support peer analysis, but it is not cash flow. I would always pair it with capital expenditure, working capital, and free cash flow to avoid an incomplete conclusion. Discuss operating profit versus earnings before interest, tax, depreciation, and amortization, explain asset intensity, avoid treating EBITDA as cash flow, and use both metrics according to the analytical purpose. Question 11. How would you evaluate the profitability of an aircraft program? I would build a program view of expected revenue, deliveries, pricing, direct material, labor, overhead, engineering, warranty, and supplier costs. I would compare actual unit economics with the estimate to complete and examine learning curve benefits as production scales. Production delays or quality issues could increase costs and defer revenue. I would then assess margin progression, cash requirements, contract adjustments, and whether assumptions remain supportable under downside scenarios. Focus on program revenue, unit costs, learning curves, production rates, supplier economics, engineering spend, contract terms, estimates to complete, margin progression, and cash implications. Question 12. How does International Financial Reporting Standards 15 revenue recognition apply to Airbus? Under International Financial Reporting Standards 15, Airbus identifies the contract, its performance obligations, the transaction price, and when control transfers to the customer. Depending on the arrangement, revenue may be recognized at delivery or over time when the relevant criteria are met. I would pay close attention to contract modifications, variable consideration, customer options, milestones, and estimates of costs to complete. Because judgments can affect revenue and margin, I would document assumptions and involve accounting specialists. Mention identifying performance obligations, transaction price, contract modifications, transfer of control, overtime or point-in-time recognition, variable consideration, and the importance of documentation and estimates. Question 13. How would foreign exchange affect Airbus's results? Foreign exchange can affect Airbus through both transaction exposure and translation of foreign operations. If revenue is primarily in US dollars while costs are incurred in euros, movements in the exchange rate can change margins and cash flows. I would identify the currency mismatch, review hedge coverage and timing, separate operational effects from accounting remeasurement, and present sensitivities. I would also distinguish reported performance from constant currency performance when explaining variances. Cover transaction and translation exposure, currency mismatch between revenues and costs, hedging, contract pricing, sensitivity analysis, reported versus underlying performance, and cash flow effects. Question 14. What working capital items are most important in aerospace manufacturing? The major items include inventory, receivables, supplier payables, contract assets, and contract liabilities such as customer advances. Aerospace manufacturing has long production cycles, so inventory can rise well before delivery and cash collection. I would analyze balances against production and delivery schedules, aging, customer terms, supplier commitments, and forecast assumptions. A useful review asks whether the movement reflects healthy growth, deliberate preparation, delivery delays, or unresolved quality and supply chain issues. Be sure to mention inventory, trade receivables, contract assets and liabilities, supplier payables, advances, production cycle length, delivery timing, and the cash consequences of delays. Question 15. How would you assess a proposed capital investment at Airbus? I would first clarify the investment's strategic purpose, such as increasing capacity, improving efficiency, or supporting a new program. Then I would model incremental revenue, labor savings, operating costs, maintenance, working capital, taxes, and terminal value. I would evaluate NPV, IRR, payback, and downside cases for lower volumes or delayed production. Non-financial factors also matter, including safety, resilience, technology, and customer commitments. The recommendation should clearly show assumptions and risk sensitivities. Discuss strategic rationale, initial investment, incremental cash flows, NPV, IRR, payback, capacity utilization, risk scenarios, maintenance costs, and consistency with production plans and long-term strategy. Question 16. Tell me about a time you improved a financial reporting process. In a previous project, a monthly reporting pack required repeated manual copying and produced inconsistent commentary. I mapped the process, standardized source files, added validation checks, and built a controlled Excel model with automated variance calculations. I worked with users to agree definitions and created a short procedure for recurring updates. The process became faster, errors declined, and reviewers received clearer explanations. I learned that sustainable improvement combines technical automation with ownership and documentation. Use a structured example covering the original problem, root cause, analysis, automation or control improvement, stakeholder collaboration, measurable result, and how you sustained the change. Question 17. What Excel tools would you use in this role? I would use structured tables, SUMIFs, XLOOKUP or index match, pivot tables, charts, and conditional formatting for recurring analysis. For larger datasets, Power Query can improve repeatability and reduce manual handling. I also use scenario switches, reconciliation checks, and clearly separated inputs, calculations, and outputs. Before sharing a model, I test edge cases, trace key formulas, check totals against source data, and make assumptions easy for another analyst to understand. Mention pivot tables, XLOOKUP or index match, SUMIFs, logical formulas, data validation, Power Query, charts, scenario analysis, error checks, and model transparency. Question 18. How would you handle conflicting data from finance and operations? I would avoid choosing a number based on authority and first compare definitions, periods, units, and source systems. I would trace both figures back to transaction level or operational data, identify whether the difference reflects timing, scope, or an error, and ask the relevant owners to validate assumptions. I would document the reconciliation and communicate any remaining uncertainty. The goal is a reliable decision, not proving one department wrong. Focus on staying objective, checking definitions and timing, tracing source systems, reconciling differences, involving owners, documenting the conclusion, and communicating uncertainty without assigning blame. Question 19. How would you prepare a downside scenario for Airbus? I would identify the most material risks, such as delivery delays, lower production rates, supplier disruption, inflation, adverse currency movements, or order cancellations. I would translate each risk into explicit assumptions for volumes, timing, costs, working capital, and cash. I would model interactions rather than treating risks independently when appropriate, then estimate effects on EBIT, free cash flow, and liquidity. Finally, I would propose mitigation actions and define early warning indicators. Cover realistic operational shocks such as delivery delays, lower production, supplier disruption, inflation, foreign exchange, cancellations, and cost mitigation, then quantify effects on profit, cash, and liquidity. Question 20. What is variance analysis, and how would you make it useful to management? Variance analysis compares actual performance with a relevant benchmark and explains the underlying drivers. I would prioritize material or recurring movements, separate operational effects from accounting or timing items, and use bridges for price, volume, mix, productivity, and foreign exchange. Management needs more than a description, so I would state whether the variance is temporary, likely to recur, or already reflected in the forecast. Each significant issue should have an action or monitoring point. Explain comparing actuals with budget, forecast, or prior year, decomposing drivers, prioritizing material items, linking analysis to decisions, and making commentary concise, forward-looking, and actionable. Question 21. How would you analyze a supplier cost increase? I would validate the increase against purchase orders, contracts, invoices, and supplier explanations. Then I would separate price inflation from volume, mix, specification changes, and currency effects. I would quantify the impact on unit cost, program margin, inventory, cash, and customer pricing, while reviewing contractual pass-through rights. I would discuss mitigation options such as renegotiation, redesign, alternate sourcing, or productivity improvements, without ignoring quality, certification, and continuity risks. Mention validating the increase, separating volume, price, mix, and inflation, reviewing contract terms, assessing pass-through and alternatives, quantifying margin and cash impact, and considering supply continuity. Question 22. How do you ensure accuracy and control in financial analysis? I build accuracy into the process rather than relying only on a final review. I reconcile inputs to approved sources, use control totals and reasonableness checks, protect formulas, maintain version control, and document assumptions. I independently recalculate key outputs and investigate unusual movements before presenting results. For recurring reporting, I would establish review evidence and clear ownership. If an error remains unresolved, I would escalate it promptly and explain its potential impact. Be sure to cover reconciliations, independent checks, version control, source documentation, segregation of duties, review evidence, unusual item investigation, and escalation of unresolved errors. Question 23. Describe a time you communicated difficult financial information. I once identified that a forecast relied on an outdated cost assumption and overstated expected margin. I verified the issue, quantified the impact, and prepared a short bridge showing the affected projects and timing. Rather than presenting a problem without options, I outlined realistic cost controls and a revised forecast. I communicated directly but constructively, acknowledged the work already completed, and followed up with owners to ensure corrective actions were reflected. Present a concise star example showing factual analysis, audience awareness, clear explanation of impact, empathy, options, recommendation, and confident communication under pressure. Question 24. What would you do if a manager asked you to exclude an unfavorable variance? I would clarify whether the request reflects a legitimate materiality or presentation judgment, or an attempt to conceal relevant information. I would explain that reporting should remain accurate, balanced, and supported by evidence, then offer a concise way to present the variance with context and management actions. If pressure continued, I would document the discussion and use the appropriate finance, compliance, or ethics escalation route. Protecting reporting integrity is more important than avoiding discomfort. Focus on integrity, accurate reporting, clarifying the request, documenting facts, explaining consequences, escalating through appropriate channels, and distinguishing legitimate presentation judgment from misleading omission. Question 25. What questions would you ask your interviewer about the Airbus finance team? I would ask which decisions the team most needs analysts to improve, what the key performance indicators are, and how the forecasting cycle works across finance and operations. I would also ask about current challenges, such as production growth, supply chain pressure, or reporting transformation, and how success is measured in the first year. Finally, I would be interested in the systems used, stakeholder exposure, and opportunities to develop broader commercial and industrial understanding. Ask about the team's priorities, key performance indicators, forecasting cycle, business partners, systems, current challenges, success measures, development opportunities, and how analysts influence operating decisions. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.